Hi everyone, so I just wanted to do a quick video today running through Tesla Motors. So we can see here it's just reached over $2,000 per share ahead of the share split they're doing 5 ways. So this is just running through why I think the price of this is just absolutely ridiculous right now. So starting with the year-on-year, the growth in this last year, so we can see it dropped. It went down to $358 and now it's at $2,400 up here. So it's got a PE ratio, so price to earnings ratio of 1066. So to put that into perspective, we can look at another large automotive company with this here being Volkswagen, the whole group, so Audi, Porsche, Lamborghini, Volkswagen, Skoda, and they've got a PE ratio of 12.95. So this company is very undervalued for what I believe, given that it's got a large market share around the world, as well as paying a dividend of 3.57%. So we look at Tesla here, and we can see it's had some growth. It's seen obviously a large amount of growth from 2016 to 2019. This year is the only time that they've seen positive cash, and their balance sheet keeps growing as well, the total amount of assets they own. So using eToro's research tab here, along with some others we'll cover in this video, we can see price analysts have it at 1295, which is completely, given at the start of the year that would have been seen as a very good price, but now obviously that's 40% drop, 36% drop. The analysts here are saying to sell. No one new is saying to hold this stock, and hedge funds have actually decreased their holdings by 1 million, so they've sold out in the last quarter, as well as if we look here, corporate insiders also sold 6.3 million worth of shares, which is not a good sign to be buying Tesla at this point. So, when we compare this to companies like NIO, which has also seen large growth, they've seen similar sort of balance sheet increasing. They're still seeing negative cash. So if we look at the Q2 financial results from Tesla, we can see here that they've had increased automotive revenue. So that actually year on year they have had a negative 4% year on year. We can see here what I like to see is the increasing amount of regulatory credits they get. So in America, they get credits for producing green vehicles, and we can see that's 428 million. But then if we look here on the net loss income, we can see they've only made positive 104 million. But if we subtract the regulatory credits, they actually are losing, say, 324 million in the last year based on their operating activities, which is not a great sign. I understand that Elon's really heavily investing. They don't pay a dividend. They're really heavily investing in the product. But I just think the recent price has just been crazy recently. We look here, so this is a website called Macro Trends. We're looking at their operating income. We can see this is the last trailing 12 months, so they've only had 3 positive operating incomes. This is the first consecutive 4 quarters of positive operating income. We look at their earnings per share. So this last year has been the only year with a positive, apart from these 3 around here, have been the only positive year for earnings per share, along with the revenue increasing. So we can see a big increase from 2014, which is expected. Tesla's now become more mainstream. However, we have seen since 2018 it's sort of getting steady, and it's not accelerating as fast as it was, given now the previous growth. So we go to Yahoo Finance here and see the price analysts. So this is the price that they expect to see average, which matches up with the eToro one here. So let's find that tab. So we can see here it's got a high of 2608 and we're currently sitting at 2017 or 2040 as the current price is. So they're suggesting you hold it, that you don't sell it. The company's obviously going to carry on growing. We can see here they're expecting 78% growth over the next 5 years and 416% growth over the next, so 78% over the next year and 416 over the next 5 years. So I've used this next year's growth in the Ben Graham intrinsic value calculation for the company, and we can see here that they've got, I've mapped out their last 10 years EPS over the years, operating income, revenue, and their book value, along with the PE ratio. So that should be over 1,000. So their book price has risen average 56% a year. However, their operating income's only increased 24% a year. The revenue 71% a year. EPS 51% a year. Given that is from negative 0.03 to 2.07, so it's not significant. That's 2.07 is below average on something like Volkswagen, which will typically have an EPS of about $2.4 per share. And the growth estimate here, so this calculated up to an intrinsic value currently of what should be trading at right now at $500. So this is when, if you remember Elon Musk tweeting that the share price is too high, this was about the value that he was tweeting that at. I think that was about $450 to $500. One interesting point to look at as well is the global production and growth of cars. So here we can see that Greater China and Asia have got the largest growth in car manufacturing. You can see here the expected volume of light vehicle sales is just going to carry on increasing, and unsurprisingly, China and India are expected to buy the most cars in the future, with countries like the US dropping so this is their current 2020 is their current year, and 21 to 2026 has had a reduction. We can see here that India and China continue to buy more cars for the amount of people there are, because over 1 billion people there. So that's something to keep in mind when you think of like the US-China trade relations. You have a potential 25% increase on import tariffs on cars, and if US are doing that, China are going to retaliate. So we come down here. So for a $30,000 vehicle, you could expect to see 6,400 increase from the import tariffs of steel and aluminium and other metals that are used for cars. So that's just something to keep in mind, that the US-China trade war could restrict the amount of automotive trade between the two countries, especially when the likes of NIO come into the market in China. You have the American nationalism, you'll see the Chinese nationalism of buy Chinese. What's interesting as well is how large Volkswagen Group is and how undervalued it is. So they've got a market share of 8.7%. You have the likes of Ford gaining as market share. However, Volkswagen trading at a PE of 12.95. I definitely think this is the one to buy, and that Tesla has definitely reached its peak. I can't see why it's trading at 2,000 other than wild speculation. If we go here on the updates, we just see people saying, we'll find one. I opened a position at 5-time leverage when it was up at 2,000 because I got excited. This is just wild speculation now. This is just people buying a stock because it's hype. It's a hype train. It's not worth that much. It's not grown that much. It's not worth having at this price. And if I was you, this is my opinion. If I bought it at 1,000, I'd have sold it by now. I bought it at 800 and sold it at 1,000 and didn't see its peak. But hey ho, what can we do? So I hope you like this video. Thank you very much. Cheers.